Hello friends, thanks for joining me. In front of you is a daily chart of gold futures, and they've been in a downtrend for quite some time now after reaching a peak up at $2,050 an ounce. You can see that price broke down, it failed to recover, it broke down again, it made a nice attempt to recover, but it wasn't able to sustain it. It's since broken down again. But now there's an interesting formation, which is the reason for the video. If we zoom in a bit, you can see this is where price broke down below the previous low. Here's the previous low. A little support came in. It was only modest support, but it was able to allow price to push higher. But this level wasn't able to be maintained. Price broke down, continued lower, and here the market had the opportunity to really push lower, but instead it reversed. And then there was some modest accumulation. There was the high of the range. Price came back. There was a second opportunity for price to continue lower, but it didn't continue lower. Instead, price reversed a second time. It's pushed up, tested this line, which is the previous highs in the range. Here's your test. Now there was very little supply, very little selling pressure in the market. This was an absorption bar, a secondary test, and now price is pushing out. You can see it's looking a little bit like price is about to break out. Here's the highs of the breakdown bar. If price was to get above this level, it'd be in a good position to push higher or retest this level and then be in a good position to push higher. But either way, when you see this W sort of shape, here's a little test. It's often associated with accumulation, especially in the futures markets. And for that same matter, when you get an M shape like that, that's often associated with a distribution pattern. You've got this W shape here, and it looks suspiciously like an accumulation pattern. I will just point out that this pattern is as yet incomplete. This level is 1774. On the futures chart, not the spot chart, 1774 in the futures, and you'll need price to push above this level and either continue higher or retest for strength before accelerating higher. And there could well be a failure at this point, and price may have to come back and attempt to shake out or something along those lines. But at this point, 1774 is where this possible accumulation would complete. It's the key level to watch. Anything inside that level is the accumulation pattern continuing. The two main telltale signs, apart from that W pattern, are the opportunities for the market to continue lower, and both times seeing a strong reversal. You can see that the market has pushed up to that level for a second time, broken out above the highs, and all that's left now is to move above the highs of the breakdown bar. This is the breakdown bar, and the highs, although that's the high of the traded range, the actual high is the true range high, which moves back to the previous close. So that's the key level to watch. Once again, it's 1774 on the futures market. That's this level. If price gets above that on the futures, it could then establish a positive influence as price starts to move higher. And if that's the case, what is a modest sized accumulation at the moment could really build some momentum as it continues to push higher. If this does complete, you may be able to benefit from this in the futures market, in the spot market, using one of the gold ETFs or buying one of the gold miners. It's not yet complete. We need to see the highs of the breakdown bar taken out for this pattern to complete. But if so, and a new uptrend becomes established, it could build for quite some time in response. So watch carefully and see if this market does establish itself and the breakout becomes complete. And if so, perhaps you can benefit from it as it builds momentum. Thank you. See ya.